All right, welcome back to the program. As you could see there, the person I'm speaking to right now is Michael Ogunremi from Hill Denham. Hello, Michael, and welcome to the program.
Good morning, Nancy. Nice to be here.
Good. What we saw yesterday from the NBS has indicated that this is the fourth disinflation in a row that we're seeing. I think inflation started trending downwards from April of this year. What do you have to say about this? And for those that are seeing this number or this figure, and I'm wondering, is inflation really waning in the country?
Okay, so I think it's a good one that inflation is coming down or has trended downwards in the last 4 months. It's printed at 17.38 for the month of July. And that was about 38 basis points decline relative to what we had in the month of June. The factors that are sort of attributing to that impressive performance that we've seen so far includes the fact that the economy has remained open, which I think it's a good one. So because the economy is open, we've had production continue to play catch up to consumption. There is also the fact that credit to the private sector has also been improving, which has sort of improved production in the agri and the manufacturing sector. You recall that at the last Q1 2021 GDP print, you noticed that both agriculture and the manufacturing sector sort of performed very well, and that's that's on the back of the fact that they've recorded some sort of increase in credits in that space. So the CBN, intervention, as well as directive to commercial banks to lend more to those sectors. So we have those two factors attributing to it. There's also the fact that there wasn't really any price shock in the month of July. We didn't really see anything like for subsidy or anything like electricity prices going up. These two commodities fell into the energy cost of production, and because we saw some sort of stability in that space, it did not culminate in any inflation. Now, so there is the normal belief that there is a disconnect between what inflation is printed at and how people perceive it. So I think it all boils down to interpreting the figures right. So the fact that inflation settled at 17.38 doesn't mean that the prices of commodities are down. It means that yes, prices rose, but they sort of like increase at a much more lower rate. So while you still go to the market and you still get to buy things at expensive prices, that's bound to happen as long as you have positive inflation prints. The only time you would have, overall decline in prices of goods would be when you have a negative inflation rate, which is something that is rare to happen. So I think that it all boils down to people having a strong understanding of what inflation is.
Okay, I like that explanation, and perhaps to explain it better to our audience, because when they see such figures, especially from the NBS, so inflation has trended downwards, or inflation has declined. For example, what we're discussing in the month of July, from June 17.75% to now to July 17.38%. That means that inflation is still up, but it's not rising as much as it's rising. Okay, let me just say this. If there's a car moving at the speed of 1,000 miles per hour, for example, inflation is now running at 950 miles per hour, but it's still high. Michael, are you still there? And I hope I'm giving, a good sense of what you explained earlier.
Exactly. I mean, you're spot on, Nancy. Yeah. So what we see is a sort of deceleration in a rise in price. That's basically, the interpretation of the inflation medicine. So it doesn't mean prices are coming down, and it's very rare to see prices coming down because there will always be demand. As long as people would want to buy things, there will always be, rising prices. But the rate at which it grows month to month or year on year, would now vary.
Okay, but if we take a look at this, though we have been able to establish that there's a deceleration in the rates of inflation, and also perhaps for food inflation, would we also say that the prices of food is, declining, or the prices of food are declining? Yeah, is that the word? Did I speak that English well? But you understand what I'm saying?
I think you're right.
You understand what I mean?
Okay.
That, yes, the price of food in the markets, is it really depreciating, you know, and perhaps what classes of food are we even seeing, experiencing depreciation, perhaps because of the season that we are in right now?
So I mean, for food inflation, right? It's interesting that the NBS is reported a slowdown. We also saw a slowdown in food inflation, in June. And when you go to the markets, you discover sometimes that the prices of the items you bought last month, they've sort of increased, and you're wondering why exactly do we have why exactly is NPS coming out to say that food inflation has slowed down? The interesting thing with food inflation is that it's a product of two things: domestic production and then imported food, right? If you check the July inflation report, you notice that food inflation for the month of imported food inflation, for the month of July was at 17.07%. That was like 4 basis points above what we had in the previous month. So because of the fact that we have the imported food inflation parts, we have the domestic production parts, it's very likely that when you go to the market and you want to buy something, the prices of the commodities would be high. But that could be because of the fact that what you're buying is an imported food item, not a domestically produced food item. So what then happens is the NBS try to create a balance and report a single figure as food inflation, but embedded in that figure are two separate figures. One being the domestic food inflation, and then the one for imported food inflation. So if you go to the market and you're buying an imported item, and you notice that the prices have increased, I mean, it's quite logical, because what you bought is an imported product. The prices of which has been increasing or are increased from where it's been imported from. So people need to understand that, when I go to the market and I buy a food item, what exactly am I buying? Am I buying a domestically produced food item, or am I buying, an imported food item? If you're buying an imported food item, there's a very high chance that the prices, is going to be high. So that's what explains, that disconnect you have between, those two parts.
Michael, in Nigeria, does that really hold sway now? Because I do understand that if you buy imported items more, definitely we will see that factor of exchange rates and the price of that imported food. But here in Nigeria, even the woman selling akara on the street, or even selling dundu, fried yam, when you ask her, why is your price high? And she's like, yeah, dollar don't rise, now dollar don't go up. You know, they hear say dollar don't go up. It's for products of food produce that we have here in Nigeria. So how can we really correlate that? We should see that the foreign exchange component should definitely have, perhaps a significant impact with inflation. But even for the food we produce here, if it's even tomato in my garden and I take it to the market, I want to hike it and say it's the FX rate that is affecting it.
Yes, I mean, Nancy, I couldn't agree more with you. That's a normal trend we see in the market, right? So you have, domestic producers wanting to hike the price of what they produce, even when it's imported food items that are increasing. I think honestly for that, there really isn't so much to do. It's a normal thing that happens in an economy where imports competes, very well with domestic production. If you have in a country where you have imports accounting for, let's say, about 60% of what is on the market, and then you have domestic production accounting for about 40%, and both are competing significantly for demand, there's a very high probability that when exchange rate goes up, it's going to affect both of them. It's not really that it's trickling into the prices of domestically produced items. It just simply means that people are just weighing expectations and trying to say that if my competitor is selling this thing at a higher price, I can as well sell it at a higher price as well, regardless of whether what I'm selling is an imported item or a domestic item. There is also the point there's also a point to say that some imported food items are sort of used as intermediate inputs to produce some domestic items, right? So for those classes of items, it's very, very possible that even if exchange rates depreciate, the prices of those domestic items are going to increase because they are using imported intermediate inputs to produce those items.
Let's talk about as we round up. If we take a look at this July data now, what is the major thing that this thing is telling us? Are we saying that inflation is trending, definitely is trending downwards, headline inflation is trending downwards, but are we going to see any time soon inflation trending downwards to the lower tens?
Okay, well, I think the general thing that we can sort of like pick out from the July inflation print is the fact that the economy is recovering, right? And I think because the economy is recovering, supply is beginning to raise up to demand. I think that's the main thing we are having compared to what we saw in January, February, March when inflation was still rising. That was a time the economy was just coming out of a recession. Supply was still very, very low. But compared to what we currently have right now, the ports, we have more import activities. If you check the trade report for Q1 2021, you notice that imports has been improving relative to what we had in 2020, right? So we've had more imports coming in. We've had some sort of improvement in domestic production, and so from a supply perspective, we've seen that the economy staying open has sort of improved production to sort of offset the huge gap that we have between demand and supply, which has consolidated to this present period. I think that's the central theme for this. But this inflation report doesn't really say so much about demand. The demand is still pent up, but what we've seen is improved supply. In terms of where we expect the inflation to trend at in the near term, say for the rest of the year, there is a sizable scope for inflation to actually come down, right? But there are some downside risks to it, and I'll mention two. The first is security. Security is a big challenge for food production because some of the items we consume are produced in the north. Because of the continued spate of insurgency, continued spate of banditry in certain food producing states in the upper belt of the country, that sort of affected food production. And as a matter of fact, even when the farmer produces this item and they're bringing it down, let's say to other parts of the country, there's challenge of it's very possible that because of kidnapping along the highways, because the highways are not so good, as far as the transport, part of the agricultural value chain is concerned, there's also a very big challenge there. The other issue that I think can also, push inflation to the upside will be supply of FX. It's good that the CBN is expecting about 3.4 billion SDR allocation from the IMF. The question now remains that are they going to open up the FX market with that? I think they will actually. But then what happens when the 3.4 billion is exhausted? Where are they going to get more?
Michael, can you hear me?
To support the economy.
Yes, I have to cut you short. I'm sorry. We will continue this conversation definitely on a later date. Definitely we get inflation data every month from the NBS. Thank you very much for speaking with me today. I've got to move to my next interview right about now. Thank you, Michael, for showing up.
Thank you so much, Nancy.
All right. All right, let's quickly take a break.